Hey, hey, hey. Thanks for tuning in to Fintech Quotient. I am Ronak Demla, your guide through India's vibrant fintech scene. From the hustle and bustle of Mumbai to tech parks in Bengaluru and swanky offices in Delhi, we will explore the stories of entrepreneurs shaping the future of fintech. Whether you're an industry veteran or new to the fintech world, we've got something for you. Let's get started with today's episode of Fintech Quotient's Spotlight series. This podcast is powered by Pixel and Pros, the one-stop solution for all your premium digital marketing needs. Today, in another episode of Fintech Quotient's Spotlight, we are in conversation with Aditya Mehta, the founder of Harmoney. Hey Aditya, lovely to have you on the show. Thank you for taking the time out of your schedule to do this conversation with me. Super excited we've been in touch for a long time now, and you've been working on something very interesting. Not that I've heard of this before. Really fascinating stuff from a world that I don't really understand too well. So I'm really looking forward to learning a lot about the whole investment and the financial world from you today. So thank you for taking the time to do this. Over to you for a quick introduction about yourself to our listeners.
Hey Ronak, thanks for having me on the show. So hey everybody, it's great to be here. The first time I'm doing a podcast, so it's pretty interesting and exciting. I'm Aditya Mehta. I am the co-founder and CEO of Harmoney. Harmoney is basically a bond trading platform for wealth management firms and financial institutions. We are digitizing bond markets to make them more transparent and efficient. We started about 2 years back and have been on great journey so far. We've built up the team to about 20 people now. So things are pretty hectic, but it's pretty exciting as well at the same time.
Awesome. So we'll come to, I think we want to really break down a bunch of things and talk to you about 2-3 different things at the introduction itself. So first, obviously, tell us a little more about yourself. What is your background? How did you get into this space? This sounds super complicated. How did you get in here? Tell us about the space a little bit, and within the space, what is exactly the role that Harmoney is playing? Would love to know more about that, and then we could take it from there.
Yep. Sure. So I think there are two parts to what you asked me. One is about my personal journey, and one is about how we started Harmoney and how did we decide to do what we are doing today. So on the personal front, I'm an engineer. I graduated from IIT Bombay, but I've worked in financial services since the time I completed my BTech. So I was in Goldman Sachs, and then I worked in a fintech startup called PaySense. But in both cases, I used to be more on the tech side and the product side rather than on the business side. So yeah, so that's a little bit about me. Fintech and use of technology in financial services is something which I'm pretty excited, and I always wanted to kind of, since the time I started my career and started working at Goldman, I always felt like this is an exciting space to be in. So yeah, so that's why I am continuing on this path. And within the financial industry, the investments and the capital market space seemed a lot more exciting on a personal level, which is why I chose to be, doing a startup in this space. Now, specifically, when you talk about Harmoney, I don't think we fully knew what we were getting into when we started. So I don't know if it's the same for other founders as well, but I think we kind of had a journey of discovery about what is the exact problem statement to solve, what customer segment to target. Yeah, so we had that entire journey. So this might take maybe a couple of minutes, but I'm going to talk about that aspect, right? So when we started, we were looking at investments as a broad space, and then we figured that mutual funds and equity markets have had quite a bit of development in India in the last 5 to 10 years. Bonds and fixed income markets, not so much. I don't think a lot of people even know a lot about bond markets and what bonds are or how they work. But yeah, so all three of us co-founders, being from the industry, we knew a lot about this, and we felt like something should happen here, right? So that's how we started. And we started with a B2C mindset that we will do a distribution play for retail investors. We did that for about a year, but we couldn't figure out uh, how to scale. And along the way, we kind of got a lot of inbound queries from the wealth management segment. So we kind of pivoted after around 8 9 months into our journey. So that was pretty quick, I would say, but we still pivoted away from being a B2C company to being a B2B company. This was back when we were just still three of us. So it was a bit easier to take that decision. But yeah, I think since the time we have moved to this model, I think we have been on a great path. The original idea was distribution, but I think we moved towards digitization, which is really a problem, right? If you look at bond markets today, they are probably like how equity markets were 20 years back, where anyone, like being an institution or an individual, they want to execute, they literally pick up the phone to book a trade with a counterparty, which is not how it is in developed markets, right? If you look at the US, almost all of the trading is electronic, it happens on a screen. That's not the case in India, and that's what we are trying to change.
You've kind of given us a lot to absorb over here. My question to you would be, how can we explain or break down the different terms that you used? What is the bond market? Who are the participants of the bond market? If you could just give us, think of it as breaking down bond markets for a layman. So what is bond markets 101 in India?
Yeah, I think, yeah, I knew this was coming because this is a niche field. I think it's a little difficult to understand as well for an outsider, but I'll give it a shot. So see, essentially bonds are one type of an investment, right? They are basically investment which gives you interest on a regular basis. Majority of the investors in bond markets are financial institutions, like mutual funds, insurance companies, banks, corporate treasuries, and high net worth individuals. So if you see, the customer segment is also on the larger side. So I think that was one of the reasons where the B2B switch for us also made sense, right? So just going back to my previous answer, right? So when we were doing our journey of discovery, right, of what we want to do, we felt that the problem is of discovery, right? The problem is not of so much of knowing what bond to invest in for the investor class that we are going after, but it is more about the process in which they execute their trades, get their data, understand or see the market, right? So they don't have, now if you look at equity, right, so or stocks, so you can just go to the exchange or you can go to your broker screen and you will see a list of prices and you will know at what price you are going to execute a trade at. That equivalent does not exist in the bond market in India, right? If you want to execute a trade, there is no button that you can click which takes care of everything. So that's what we want to eventually get towards, that bond markets should be as easy to execute as equity market. So if you think about it, we're trying to build the underlying, the technology or the rails to digitize the market. Obviously a lot of support has to be there from the market infrastructure companies, right, like the exchange, the depositories, all of that. But I think that's what we will work on and bring everything together into one place, so that a institution or a wealth management firm who is doing buying or selling of bonds for their own assets or for their clients should be able to do it very very easily, should be able to do it in seconds instead of spending 15 minutes on a trade.
So now let us understand or break these points down. So I could be an individual looking to invest in a bond. Now, probably this bond could be issued by the government of India. Without Harmony, how would I go about investing in bonds?
Yeah, I think that's a good question, right? So I think let's take up any individual investor, right? Let's take Ronak. Let's say he wants to invest in a bond, right? So today he would maybe go to his wealth manager or a financial advisor and ask for a bunch of options, that hey, I want to do a low risk investment. I don't want to do stocks basically. I want something which gives me fixed returns. So how do I do that, right? And that's when the wealth manager will suggest you to invest in a bond. He could also suggest you to invest in a fixed deposit or a debt mutual fund, right? But let's say you decide to go and invest in a bond. If you do that, then the wealth manager will give you a bunch of options which he or she would have to go and talk to five different brokers and get those choices for you. So there is no single source of information for the wealth manager. Then in the next step, once you have decided which investment to make or which bond you want to invest in, the wealth manager then will go back to the broker and say, hey, I want to buy this bond for my client. He'll do that on a phone call or on WhatsApp. Basically, he'll be in an offline world, right? They will agree on the price on the phone, and then they will do a handshake on the phone and execute, right? So that this is called over the counter, right? OTC. This is a OTC trade. Once they have agreed, then the broker will take care of the KYC and the actual settlement process. They will report the trade into the exchange, and then you make the payment and they will deliver the bonds. So it's the whole process for that as well, where the broker, the trader who has closed the trade with your wealth manager, who has done it on your behalf, he will then hand it off to his back office, which will be in an email. Then the back office will create the whole calculation, because bonds are not as easy as stocks. They don't have just a price, right? So you basically agree that I want this much yield, or I want this much return, and then they have to back calculate the price and the total amount to be paid. So they do that in an Excel, then they report it into the exchange, and then you make the payment. So it's like you can see at every stage there are so many people involved, and it's fairly complicated for a normal person to understand what is really happening, and things can go wrong at every step. So the whole process takes time. It's operationally heavy and it's fragmented, right? So that's what we are trying to solve for, that you have a single screen which brings everything together into one place. Yeah, I hope that gives a better clarity of how things work today and what we are trying to do. Obviously, we talked about an individual investor in that case, but now the real customer for us is the institution, right? So in the institutional world as well, right? I mean, instead of starting with Ronak and his wealth manager, it will start with the institution. But the process after that remains the same. The institution will have a trader who will call the broker, who will have a back office. The institution will have his own back office, and they'll coordinate and they'll do a lot of back and forth to get a trade done. So at a high level, the process is still the same whether it's an individual or the institution, but you can see that it is fairly complex, prone to errors, very fragmented, and that's what we are trying to solve.
That is a very detailed understanding now. So, Aditya, now there are these institutions who are using the platform that you've built, Harmoney, to manage the trades, right? So, what I've understood is you are running this entire process that used to happen in a very broken and offline manner on a platform. So, naturally, because it is being platformed, if I could use that term, the benefits are that it's much more approachable. You are in a way solving for discoverability as well. It is super easy and convenient for these institutions to place their orders. So it's obviously increasing the efficiency at which they operate. And you're streamlining the entire process to bring everything under one roof, if I can say so. So you're essentially making this entire process easier. Does this also reduce the time it takes for the let's say the broker to get? Are you able to go into that leg where you're in between the issuer and broker? There's an IB player sitting and launching this offer of the bond, if that's what it's called. Do bonds have offers?
Yeah. So let me give a little bit of an idea of how the primary issue or the new issue of the bond works versus the trading aspect, right? So we don't get into, at least right now, do not get into the new issuances part of the bond market. What tends to happen is the company who wants to issue the bond will have an investment bank managing the process for them. The investment bank will get the bonds placed with various investors. Again, these investors could be institutional investors like mutual funds, insurance companies, or it could be individuals as well. But after these have purchased or invested in the bond in the new issue, what happens is they may want to sell the bond for whatever reason. They may want liquidity, or they may have made a profit and want to book that profit, right? So that's where the trading happens, and that's where Harmoney is addressing the market right now. So we are in the secondary markets of all the bond trading that happens today. Um, we have not thought about the primary markets as of yet.
Okay, so a new issue would be considered the primary market, and resale or bringing liquidity for existing holders would be considered the secondary market. You're playing entirely in the secondary market space, which is great, right? So these bonds typically, what would the average value of a bond look like? Is it very easy for somebody who's just starting off their investment journey to invest in bonds? Like, does it start as low as 1,000 rupees? What does that look like?
This is where I think I'll go back to the pivot that we made, right? So typical bond that is issued in India has a minimum ticket size of 10 lakhs. And typically, if you look at the size of the trades, they typically get traded, each trade is in crores. So this is where I think we had that. We probably made a mistake when we started with B2C first, because we thought that maybe we could just take the 10 lakh bond, break it down, give it to investors. But that was very, very difficult, right? So that's that's the nature of the market, right? And this is not necessarily specific to India, right? So even if you look at global markets, the typical size of the trade in the US is in millions of dollars for a single trade, and the minimum is $100,000. So $100,000 investment in one shot is not something an average investor would do, right? But an average investor typically puts his or her money into a mutual fund, which then in turn ends up buying this bond, right? So that's how the market looks like.
Super interesting. I think we've spoken about bonds. Now let's shift gears. Let's talk about your entrepreneurial journey. So, what has the journey been like for you? Personally, it's obviously called a very lonely journey. It is quite an uphill battle. You've done fairly well. You've pivoted. You're a part of Y Combinator. So, how's that journey been like? If you could just give us a walkthrough of what it's looked like for you.
Yeah. So I think I left Patience in 2020. So almost, yeah, 3 years now. So I think a lot of the first 6 months was tough because it was COVID as well. So we were figuring out in the middle of COVID about what we want to do, right? And I when I started, I did not want to do a part-time discovery of what I want to do as a startup, right? That's why I left my job. I mean, I had an exit as well because Patience got acquired by PayU. So I was fortunate to be able to take that jump. But despite that, it is a fairly difficult process and a fairly difficult journey, right? I think people can tell you about how it is and give you, their share their experiences, and you learn from those experiences. But it's not the same thing as actually, going through that experience yourself, because no one is going to explain or be able to explain what their emotions were during that journey. I think it's, being doing a startup is fun, it is exciting, but it is also very, very hard. There were times in the journey where we had questions about, are we on the right track? Is this going to work out? I think there was a time in 2021 where we were like that, if you're not able to figure this out by December 2021, then we are going to go back and look for something else, right? Fortunately, we did not have to make that decision. I think we were pretty close. There was a low point at some point in 2021, but I think we somehow managed to cross that valley, I would say, and come out on the other side. I think that's when Y Combinator also happened. I actually met startup founder who pushed me that you should apply for YC. We had applied in 2020 as well. We had not. We went to interviews, but we didn't get selected. But then he said it's fine. You should just reapply. 30% of the batch is reapplicants. You should go through. I'll recommend you. And you guys are on to something. And we just applied. But I think there was a difference, right, in the first application and the second one. The first application, when we did, we were ourselves not sure what to write. I think when we reapplied the second time, I finished the entire application in like half a day. It was that clear that this is what we want to do, right? And then we just submitted. Like, we just made some editing changes and submitted that application. Got into the interviews. Even in the interviews, you could tell the difference between the previous year and the next year. And I think the whole point that I'm trying to make over here is that the first 1 or 2 years you have to use to discover what you really want to do, and make sure that you come up with a plan which can sustain you for a very long time. And I think we did that. And after that is when we raised money, we started building a team and started really building for a scale.
Yeah, very valid points. I think just taking a leaf from Decentro's Y Combinator application and experience as well, and having spoken to a lot of Y Combinator founders, backed founders, I think to all the listeners, here's one thing I have to say: the Y Combinator application is like a mirror. So it helps you to identify. It's giving you a third party look at who you are, what you're doing, what you're thinking. I think they look for clarity in thought process, because honestly, they are taking very, very early stage bets. Nobody knows what's going to happen, right? They just want to be able to back the right set of people who are thinking the right things. So clarity is probably fundamental to your Y Combinator application. If you get rejected, it's not the end of the world. A lot of people have tried multiple times and ended up getting in. And that also gives you an opportunity to really demonstrate actual real world results of what you've been able to achieve in the last 6 months. So I think to all the founders, the only advice that I have seen has worked for a lot of people is just never give up. Obviously, you're entrepreneurial, you're not going to give up, but have a way to clearly summarize your learning and your growth in the last 6 months and really sell and pitch yourself the right way. You'll make it. And even if you don't make Y Combinator, you'll still make it somewhere, right? It's that's the beauty about life and the entrepreneurial journey. So Aditya, I think let's cover very quickly what are the signs that you've seen in Harmoney that you're growing. If you could just point to some metrics. I think you've briefly covered mistakes, but if there's any other very quick thing that you would like to glance over for entrepreneurs not to make that mistake, please do let us know. And then we'll do a rapid fire round after that.
All right. So so in terms of growth, I think the way I would say is, see, more or less our business was close to zero towards the end of 2021, right? We were barely doing a couple of crores of trading volumes in a month. Today we do more than 300 crores of traded volume in a month, which is a significant from where we were about 15 months back. If I were to talk about business metrics, right? So when we were way back in 2021, I think we were hardly doing a couple of crores of trading volumes every month. That's when we got into YC. And since then, so today it's March 2023, we're doing about 300 crores of trading volumes every month, right? So you can see the exponential growth. And I can see that continuing to grow. I don't think it can grow at the same pace, but it will still continue growing at a fairly rapid pace for the next 1 or 2 years. I think the number of customers that we have, the type of customers that we have has also increased and improved significantly over the last year or so. I think that's mostly the metric that we end up tracking to indicate whether we are on the right trajectory or not. But I would also say that when we started versus when we are at now, like, we obviously did not have a product when we started, but we built that product, which was the single screen, and it's been live for about 6 to 7 months now. And a lot of the volume has shifted from the offline world into the online world for Harmoney as well. Like, when we started, because we did not have a product, we started in the offline world, but we have started shifting things to the online world as well. So that is pretty satisfying, and that kind of shows that the bet that we made, that digitization is here or is going to be here, is actually happening, right? I think in terms of mistakes, we probably spent a lot of time on strategizing and maybe talking to investors when things were not clear in our head. Initially, I think it's better to spend time talking to customers and building product. It, yeah, I mean, it's fine. Like, we actually wrote quite a bit of product which we threw away also. I think that's fine. But it actually at least allows you to experiment. If I were to go back 2 years back, I think that's the thing that I would change. That spend more time talking to customers and building product, and less time on strategizing and talking to investors.
That is so true. I think you're the embodiment of like the classic YC saying of spend time with your customers, talk to your customers. I think it's iconic when PG or Paul Graham asked the Airbnb founders, "What are you guys doing in the Valley if most of your customers are in New York, right? You should be there. You should be talking to them, not talking to me." And I think there have been a lot of podcasts that have really covered this make famous saying of Y Combinator. The other one is make something people want. So that's super interesting. Now getting into the rapid fire fun segment of the conversation, what are the pro tips that you would share with founders who are just starting up?
All right. So I think when you start up, don't worry too much about the idea. Make sure you have the right co-founder. I think that worked really well for me. I've got really two solid co-founders with me, and I think that can take you through all the ups and downs, and pivots, and change in strategy, and change in the direction that you want to take the business in. The core idea can change, can remain the same, but don't have to marry yourself to a particular approach or a product. I think the team that you initially build is a lot more critical.
What are the frameworks that you use, Aditya, that drive your decision making as a startup operator? Is there anything that you would highly recommend that has worked wonders for you?
So this one's a bit tricky because this answer probably keeps changing every 3 months, because startups keep changing every 3 months, right? So I think what is important is that be ready to sign up for that change, that you're going to face a lot of changes. Because I think when we started, right, like 1 year back, there were three of us and we used to do everything. And then at some point you have to realize that you need to give up some of those things, hire people. Those things, I think those things happen, right? So that's why the answer keeps changing about how you make decisions. But I think at some point, so right now if I were to think about it, I think very carefully about, is this worth my time or not? Because what really matters for us is, okay, we have come to a point where we have created a foundation, but now we want to demonstrate scale, right? So basically think about, am I spending time on something which will help us scale, or is this not going to help me scale, right? So then I create frameworks, and I create frameworks which change, I think, every few months, because the position of the company changes every 3 months.
Nice. So this is pretty cool. Who's regulating the space? How's regulation treating you? Is there anything notable that's happening in the space that you would like to cover?
The space is regulated by SEBI because this is capital markets. They have recently come up with a framework for online bond platforms such as ours. So we are getting a broking license. I think we should get it by sometime in April of this year, right? So I think there are a few positive developments on the regulatory front, because the regulator is pushing for digitization in their own way as well. I think there is a lot of work to be done on top of the regulatory framework to innovatively deliver well-functioning product to the end customer. So, and that's where I think that's where we sit, right? That's where Harmoney sits.
Awesome. So let's try and paint a picture of Aditya Mehta as a person to all the listeners. What do you like to do in your free time? What are things that excite you outside of work?
I read a lot, so that's one of the things which I enjoy. And typically, I end up reading non-fiction or science fiction. Could be a little bit of a cliche from a founder's perspective, but that's something which I enjoy.
Also, I think coming back, is there any particular book that you would like to recommend to everybody? Right? What is one book that probably most fintech enthusiasts, founders should read? If not, is there any other resource that you could point them to? Or is there any quote or any fantastic piece of advice that you've gotten in this journey that you would like to propagate further?
Yeah, so I think there's one book which I particularly like because it actually helps you think about mental models, which is Poor Charlie's Almanac. So this is basically a bunch of speeches and articles written by Charlie Munger. I think a lot of us would know is the vice chairman of Berkshire Hathaway, and so that book's pretty interesting because it gives you a lot of frameworks about how to think about things when you're doing a business. So that's one book which I like. I also enjoy reading random books which are outside my field. So for example, I've read a few books about biology, including with a book called Gut, which I'm reading very recently, that talks about how a lot of your brain is actually in your stomach, which is a very new concept and which surprised me. But apparently, there's a lot of research, cool research going on in that space.
Awesome, yaar. This has been a really interesting conversation. You don't meet people every day who do things in the bond market, who are building systems or platforms in this space. So it's always fascinating to have a conversation with you. Even when we've been speaking otherwise, it's been very captivating for me because I get to learn something new. I think for anybody who would want to get in touch with you, if they have any questions or if there's anything that they would like to talk to you about, how would they go about doing it?
I guess you can share my email in the podcast and they can reach out to me via email. Yeah, I mean, I enjoy talking to people. Enjoy if anyone wants to ask me anything, they can feel free to reach out. It was great to be on this podcast as well. This was the first time that I was doing something like this, but it was fun, and I think I'm going to do it again if and when the opportunity arises.
No, absolutely. I think the feeling is more than mutual. Really, I'm grateful to you for taking out the time to do this conversation. And like I've told you, we are going to be doing a lot of other content. I will definitely take you up on the offer of doing more such talks when we come out with the masterclass. This will be a super, super interesting masterclass that we could do with you. So thank you so much for your time. And for those listeners who would like to reach out to Aditya, I'll plug in his socials in the description. So you'll be able to reach out to him on his preferred channels through there. Thank you so much for your time, everybody. Have a wonderful day. And that's a wrap for this episode of Fintech Quotient's Spotlight. Do share your feedback, thoughts, ideas, and even your fintech stories with me. Your feedback will help us to do better. Our social media handles are plugged in the description below. If you enjoyed listening to this episode, don't keep it to yourself. Spread the fintech fever by sharing this podcast with your friends, colleagues, and anyone passionate about fintech. Until next time, keep those insights flowing and let's build the future of fintech together.